Welcome, Blockhead traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer, as a reference point on various financial topics. We expect you to do your own due diligence and your own research and make your own financial decisions. Today is Sunday, May 23rd, 2021, and this is Blockhead Traders Weekly. This week I have myself, Sprocket888, and I'm joined by fellow Blockhead trader, Viper XL007 on the far side. This past week, there has been a lot in the news lately about all things crypto. So we decided we'd take this week's episode just to scratch the surface on this thing called crypto. We'll give a little bit of our thoughts, opinions, how we might try to trade it, how we kind of look at it, how we view it a little bit. It's definitely just scratching the surface. We are also really still learning a lot about this crypto world, how might best to trade it and things like that. But before we hop into that topic of crypto, I want to give a plug out for our Discord channel. As always, I want to remind you that we have a free and open Discord channel that you can join. The link is in the description below. It's just a place to hang out, ask questions, better yourself as a trader, get opinions from other traders that are out there. It's a pretty small community in there, and we'd love to hear from you. In addition to the Discord, there is another link in the description below. I just want to remind you that Sprocket888's trades are all publicly available, the good, the bad, and the ugly, on thetagang.com/Sprocket888. So check that out too as an additional resource for yourself. So this week, as we jump to the crypto topics, I myself haven't really dove back into the crypto world much. I've been kind of on the sidelines, paying attention a little bit more and more, kind of watching the price action, watching the news, watching the tweets from Elon Musk, and those type of things. However, Viper XL007 has dipped his toe a little bit more recently into the crypto market. So we're going to toss it over to him to get some of his viewpoints and thoughts on the world of crypto. Mike?
Yeah. Very much scratching the surface here. There is so much to talk about that you can talk about when you're talking about crypto. So by all means, if there's a particular thing or a particular angle on crypto you're interested in, even maybe more of the technical side of things, I think we have a fair enough understanding that that could be absolutely a future episode. But so by all means, comment below or in the Discord, get a hold of us. Let us know what else you would want to hear from this space. So for today, what I want to go over is trading crypto, or how to view crypto as an asset, because first of all, if you've never ventured in, you've absolutely been bombarded with headlines and news and tweets and all that sort of thing. And it's up, it's way up, it's record highs. And now it's just the world is on fire and it's dying. All that stuff. And I got to be honest, for the longest time, all the way through a few months ago, even, as I was learning price action and I was getting into price levels and all that kind of stuff, I took more of an ignorant view of just, I don't know, it's crypto, it's a whole separate thing, it's, whatever. And never really took a serious look at it. And what I'm learning and what we'll go through now is how to view recent news, how to view the market, how to potentially set up trades. Now, I should be, in the interest of full disclosure, I have not put any of my own, my own capital directly out of my wallet. I've done some mining and I've earned Bitcoin that way. And so I'm using that mined Bitcoin to then flush around all the different coins and and trade with that pot. So that, and I say that because it's kind of like we mentioned before, when you're doing paper trades, yes, this is real money that I've earned through mining. But also I'm a little more loose with it than if it was my own cash that I put in there. So full disclosure. And then also, as always, not financial advice. All I want to do, and I'm going to try really hard not to bring my own opinion into it as far as where a price might be going or not. I just want to show you some readouts that I've done because it has been genuinely interesting to see. So what I want to cover are really the big ones, Bitcoin and Ethereum. Obviously, you've probably seen Dogecoin is all over the place. I am not. I have not and will not put any money into Dogecoin. But for funsies, let's look at that chart as well. So that's the plan. As far as my personal view, like, I mean, I think crypto is great. Future looking, there's a lot that still needs to be settled about it. But my key interests, Bitcoin, Ethereum, and then what we will not be discussing or reviewing are Helium. I'm very interested in that. And Chia, I'm very interested in that. But those two, not covered here. So let's take a look. And here we have a Bitcoin chart. And I have my levels on here. Same plug as always. If you haven't reviewed our price levels episode, go back and do that. That is where I'm drawing these levels. I've cut some of them out for simplicity. And I just moved that one, but that's all right. Okay, so here's the general action that's happened. We had this massive run up, all the way up to around 64,000. And then we came down a little, we bounced back up, and then the last, I'd say week has just been obliteration. There's been several factors that have led to this. You've probably seen the headlines. You can go do that research. What I want to really focus on here is when we don't care about the news, we don't care about the underlying, there's still plenty of technicals that check out that we can dig into here. So first off, just looking at the levels here, what's interesting is levels hold. So here we have a 33,619 is what this yellow level, which is a daily. Again, if you've seen that episode, you know that I don't like dailies, but in this particular asset, dailies become pretty important to chart because it moves so fast. So we came down on this big crash that's happening right now. We came down here and we've gotten several good bounces off this level. And so I find that interesting. I think that is one indicator that potentially this is a potential bottom here. So what else can we do? And again, the whole point of this is just grabbing our context of what is happening. Is this on fire? Is this over? Or is this just normal price action? So let's move on to another technical indicator that I like. Let me hide my levels, get that cleared up for us. I mentioned last week VWAP, volume weighted average price. There's another tool of VWAP that I really, really love called anchored VWAP. So when you're dealing with VWAP, I mentioned it last week, it applies to intraday trading. So your VWAP from May 15th is completely irrelevant to May 16th. There's a new VWAP calculation per intraday. Anchored VWAP lets you place a point in time, and then it keeps a contiguous VWAP over multiple days. So what I like to do when I'm using anchored VWAP, and I use this on other trades as well, or other stocks, when we see a big run, so let's make this look like the run it was. So we see this big, almost parabolic run up. I like to anchor VWAP just before that run happened. And the thought process behind that is we have a nice level lead up to the run. So let's put a pin in the start of the run, or somewhere around there, and then let's see how VWAP shakes out. So in this case, let's go back. Let me grab anchored VWAP and let's drop it. Let me go a little bit further back. There's a little bit of action here. I could drop it literally right here, but there was some nice stabilization back here. So let's drop it right before this guy right here. So we drop it. So now, like I said, this is a running VWAP for multiple days. And so now my normal VWAP, and analysis, it holds true. It holds the same thing. We're just looking at a different timeline. And what I mean by normal VWAP analysis is whenever you're looking at VWAP, intraday or anchored, if you're above VWAP, you are bullish and in a bullish trend. And VWAP tends to get tested a lot. VWAP will get hit, and an underlying may break through and it turns bearish, and then it might get tested and then it runs bearish, and now you're in a downtrend. So clearly what we see here is as expected. A massive run up is just way overbought. These levels way, you are just universes away from VWAP on some of these prices way up here. So what's interesting then again is now if we look at what's happening right now, we've actually come crashing down right to that anchored VWAP. So that is, good and bad, I guess. We confirm the VWAP line, that this is, along with being a price level, this is now also makes sense as to why things are stalling out right here. That doesn't mean it's over though. Like I said, test, and then it could break through and then we go bearish, below VWAP. So that's an interesting data point. And then one other one I want to talk about is if we break out a Fibonacci, and again, this is, just like last week, we're nobody special. We're learning along with everybody else. So if you know something about what we're talking about, by all means, get involved in the conversation. Let me know if I'm doing something wrong here. So one Fibonacci chart that I've started to use is called the Fibonacci retracement. And again, this is not a solo metric, but it's part of your tool belt. And the point of Fibonacci retracement is to give you an idea of new levels that a run up may stop back to on retracement. So the way that we're going to run this is you grab, and I'm using TradingView for all of this. So whatever charting tool you're using may be slightly different, but I grab my Fibonacci retracement. You start at the bottom of the trend. So we obviously had a big run up. We need to start our retracement at the bottom of the trend. So we're going to grab, and you want it to be the bottom of the wick, not just the candle body. So I'm going to, we kind of popped and started the trend right here. So it's a little hard to see, but I'm going to grab the wick right about here. And then we drag this up to where the top line here comes all the way up. And you can see the peak of the trend happened right here. So we want this top line to be right on that top wick. I'm just going to stretch it out so that way it looks so we have a little more visibility. But notice, let me lock that. Click. Okay. So I put that top line right at the top of the trend. So what this is telling us now is these are the Fibonacci levels of retracement that when a trend stops, these are the identified levels when the Fibonacci sequence would estimate a pattern, a retracement may stop. And we have the 23.6% is the first line here. And then we go into the 38.2, the 50% line, all the way down to a full 100% retracement all the way back to the beginning. And the thought process here, as I understand it, is that retracement out of the red zone is almost guaranteed, because that's the whole point of retracement. Otherwise, you are not out of your trend. And then settling around the 50% line is fairly expected, but it's like any level. It's not going to be a complete binary yes or no. So once again, though, we find here that we are sticking to a decent level here as this is happening. So now we're kind of getting confluence around where the price is at currently, where we're seeing that this is a Fibonacci retracement identified level at the 61.8% line, which is interesting. And then the final thing that I did that I found interesting when evaluating what's happening is one other Fibonacci tool called trend-based Fibonacci extension. And the whole point of this tool is when a trend is happening, this is meant to help you identify potential levels where the trend may stop. And so you would potentially want to set price targets for that. So obviously the trend is broken. So this isn't really like a tool that's going to help us make any trades on this action right here, but it can give us some of that confirmation of what's happening. So the way we use this is when you need to identify a completed Fibonacci sequence or retracement. And so that's actually what we have right here back at the beginning. We have a completed retracement on a micro scale amidst a broader trend where we run up, we hit this, we come down to a Fibonacci level, and then we take off. So that is a completed sequence. And the reason that's important is because the way we chart this, the way we use this tool is you identify and stick points to that trend. So again, this is a 3-click tool. You click at the bottom, you click at the top of the confirmed trend, and then you come down here and close it out. Your third click is catching the bottom of the confirmed retracement, and then we get a click, and so now we have a new Fibonacci series here. And so what this series is saying is this is anticipating, like I said, this is anticipating where a potential uptrend may end. And so now all of a sudden, Bitcoin hitting that 64,000 crazy level, I mean, it's crazy, and it's above the 100% line, 100% Fibonacci. But, I mean, it's also not crazy in the sense that, it cleared up above the 100%. It almost pushed into this 161. But then, it kind of floated around here at this 100 line, and then it began its retracement. So interesting seeing when you use these tools patterns to identify what's happening. And again, I'm leaving this up to you to make your own decisions as to if this means anything to you. But this is just kind of a way to break down and get through the noise of it's a massive sell-off or whatever. So let's do, and I'll go through it a lot quicker now that we understand the same tools. If we go look at Ethereum and see what Ethereum is doing. So again, I didn't clean this up. Obviously, I have way too many levels identified down here. But we'll zoom in and we see that let me flash back to Bitcoin real quick. Bitcoin appears for now, like I said, to be gaining some support. We have at this level that we've identified through multiple means, we have multiple tests of support. It's still in a downtrend, so we haven't actually broken the downtrend. So like I said, it could still break through this level and continue down. But that's the situation of Bitcoin and where it's at right now. If we go look at Ethereum, this one, we can't really say that quite yet. I mean, it did break down to this blue weekly level, and it did get support and it popped back up. But now it's coming down to give it another test. So similar, but not as many tests of this level. So that's initially what these levels are telling me. And then again, if we do a quick anchored VWAP, grab this guy. Here's the start of the uptrend. I like to go back just a touch. So there's a little blip right here before it rockets up. Let's go ahead and anchor ourselves somewhere back here. And interestingly enough, we can confirm overbought territory on a bull trend, way overbought territory up here. We come crashing down and we are stalling out around, or anticipated to stall out around this anchored VWAP. which holds at a price level. It holds as anchored VWAP. And if I were to enter a trade on any of this information, I want to see a confirmation of the trend. And what I mean by that is I want to see VWAP get tested. I want to see this level get tested and an upturn in the trend. Just the tick, the sign that this is a confirmation that we are still bullish. And that hasn't happened yet. So this is not the time to enter anything, in my opinion. There's that thing I was going to avoid. But I'd rather tell you not to buy something than to buy it. So we have that going on there. If we hop over real quick to our Fibonacci, we grab the bottom of the trend. We bring it up. Didn't quite zoom out far enough, but that's the top candle. We grab that, and we are settling on a Fibonacci level as well, a retracement level, the 61.8% retracement level. So that would stand, to identify this at least as a major level. If it's not going to be a turning point, it's going to be a stalling point. And then finally, did the Fibonacci trend anticipate this trend in the top of this trend? So again, I do need, let me go back. I need to grab a confirmed, like I said, a confirmed Fibonacci sequence. So again, this looks similar to Bitcoin, and that's not uncommon because Ethereum is based on a number of bits of the Bitcoin blockchain. So they do move together. But here we have that confirmed Fibonacci sequence. So real quick, I grab this guy. We go bottom, top, and down. So now we're once again looking very similar to what we saw in Bitcoin, where our Fibonacci trend said, here's the 100, and it just blew through that. And then it kind of settled around this 161%, and then we came crashing down. So while there are a number of catalysts in the news cycle, the one big takeaway is that's stocks. That's anything that you trade. You identify and you do your analysis on these charts such that when a catalyst comes along, you know the probability of what comes next. So had we confirmed that Fibonacci sequence before the trend, we would confirm it. We could potentially use the Fibonacci trend extender, and we could have those Fibonacci levels identified to say, here's the prices I'm looking out for. And then you stay informed as the price runs. And you would know, had you done that work ahead of time before this, everything's easier in hindsight, but had you done that work ahead of time, you would know that when we were way up here, this is just, nothing is making sense. This is way overbought. Don't touch this. And if I'm still holding something, sell it and let's wait for the crash, because especially when you start going above that 100% of the Fibonacci trend extender. Lastly, like I said, for giggles, if we look at Doge, oops, that's the wrong exchange. I charted it here. I left this a mess. I didn't clean it up before I came back. Let me turn my levels on. This only recently started getting traded, so it's a mess on what levels are available, but you can still chart it. And what we see is all I had to go on were weeklies and some dailies. Actually, purple is monthly, so I had some monthlies and some dailies that I went on. And it had this massive run up. It's, every one of these bumps has been preceded usually by a tweet, but again, we don't care. It's a catalyst. Catalysts happen. And actually what's interesting here, what I thought was most interesting, the levels are the levels. Like they're predicting where things stall out, but what was most interesting is this is a decent this is a decent test case for the trend extender. Um, so first we chart our Fibonacci, bottom of the trend at the top of the trend. We can see that right here, up and down was a retracement confirmed. So if we use that A, B, C for our trend extender, we do a click, click, and then we come back down to here. I mean, first of all, we see that we've already dropped below where we started. So perhaps I'm completely using this wrong. But if it were to break out to the upside, we have these levels predefined. However, like I said, not a fan of Dogecoin, not a fan of assets that were created to be a joke. And the only reason they get life is because somebody talks about it. Nonetheless, when you look into it, there are elements of levels holding true. And so if you wanted to get in there and mark your levels and make some plays, make some day trades on them or something, as far as I can tell so far, that's possible because it's sticking to the levels. So that's the gist of it. Like I said, Jeremy, I don't know where you fall on how crypto fits into your portfolio, whether keeping it safe with the big guys, with the Bitcoins and the Ethereums of the world, or just buy and hold because how you feel about it as the way of the future and that it's worth having, or what your take is on it.
Yeah. My personal view on crypto as far as in my trading portfolio is it's not there yet. It's definitely something I've been kind of watching. For me, a big thing for what I decide to trade and how I decide to trade it, I love options so much. Like, to me, that's just a game changer. Is the options give you so much more cushion or margin of error, and especially when dealing with crypto type assets that can be all over the place. They can be up, they can be down. I kind of appreciate that buffering when I'm selling premium. Additionally, the buying power in options for capital efficiency is just, I just love that stuff. So there's really not a lot of options available when it comes to trading cryptocurrency, which is pretty much the primary reason why I haven't traded it. The volatility in it is super awesome, which would be right up there for premium selling.
So at any point, is there a point where volatility becomes concerning? Because obviously volatility adds value to the option. But to me, from my perspective and much more limited experience in options dealings, that, I mean, like we just saw, like Bitcoin lost half of its value. It blew through a whole bunch of levels to go down there. Is there at any point where that volatility becomes a problem for your option strategy?
A little bit, but let me give you an example of some of, I've played some really high volatile trades, underlyings. And what it basically gives you is when the volatility is so high, your premium is usually quite a bit higher. So let's say I'm selling a put on something that's, 200%, 300% volatility. The premium that I collect on that, and I'm always, my strike is I'm putting them down at like 16 delta, 20 delta, which basically means, there's a 16% chance, a 20% chance that the price is even going to drop down that low. But then when you add the premium to that strike price, the break even is significantly even below that. And so what that volatility lets me do is it lets me ride the trade a little bit longer. So, I always set my bailout price, and my bailout price is typically 2 times the credit that I received. So when you got that much premium in there, 2 times that puts your bailout price like down in the 2 delta range, which is, 2% chance that it's going to get down there. So, I mean, yes, you're going to get more violent moves, but the cushion on how I stay in that trade is wider. So if it's a lower volatility trade, I'm going to jump out of that trade a lot faster if it starts going against me, because I don't have that much cushion to the downside or the upside, whichever way I happen to play it.
I see.
Does that make
Yeah.
sense?
So it sounds like the key is to pay attention and have a delta strategy, because it sounds like the answer to my fear is delta, and the way delta calculates, like you said, probability of price hitting that level. So it sounds like leaning into and having a clear delta strategy is what keeps you comfortable.
Yeah, definitely. And actually, the analysis you did on Bitcoin is a perfect example of a type of underlying that's right at the level that I would start selling a put. Okay, so you get some confirmation that you're approaching some trend, right? So for other equities, right, I'm using like a 15-day moving average, 21-day moving average, 200-day moving average. Either way, your anchored VWAP is a great example, because as it's coming down and it's touching on that anchored VWAP, you could get a trend reversal, but you could also break through that and sink a little bit lower. So if I take the price at that point, right, and let's say there happen to be options available on Bitcoin, I would go down to, a 20 delta strike or something. So that's going to be significantly below that level. And I would sell a put on that because I might be bullish on cryptocurrency. Okay, so I'm going to collect premium on that, but that's going to be significantly below that level of your anchored VWAP. So if it hits that and bounces, I'm golden. Okay, but if it breaks through that, I've now got a little bit of cushion until I hit some sort of break even, which I definitely hang into break even, and my bailout price is basically, that distance to break even negative. So that lets me hang out in that trade a little bit longer.
I see. That makes sense.
So the one thing when it kind of speak about, trading Bitcoin options and things like that, I feel it's really close to being able to do, because, one of the products that is on the CME futures exchange is actually Bitcoin. And I can bring it up on the screen right now. TD Ameritrade doesn't let me trade. I actually don't know if they let anybody trade. I'm not sure. I have to look into this a little bit more. But you can actually trade options on the Bitcoin futures. Now, for some reason, when I try to make a trade, I get a message that says, "Hey, this strike is not available." Not really sure why. But this is the type of thing that I would go after to trade. And that's really going to leave you to the big players, because there's no futures products on Ethereum. There's no futures. The only futures product on crypto is Bitcoin at this point. And they have two levels. The CME exchange, they have the mini Bitcoins, which basically one future is 5 Bitcoin. So the notional value of that is huge. And we might do a future episode on futures to kind of break into some of that jargon. But just know that that's, roughly a $220,000 product to trade. And that's just too big for most people. So maybe about a month ago, they introduced what's called micro Bitcoin futures, which are essentially like 1/100th of that size. So, the tick is, I can't remember what the actual entity is that it resolves to, but the buying power, the notional value that you're controlling is more like $4,000. But those micro Bitcoin futures don't have options yet. But that's really the part that I would be waiting for to start dipping my toe into the crypto market. One of the other ones that I'm kind of looking and excited about is when Coin went public not that long ago. I'll just pull up the chart here real quick on Coin. But this is it's not a direct crypto play, but it moves, very much in sync or with relation to the crypto market. And you can see that there's not much on this chart because it only recently came into be sometime in April, mid-April. And it's been sliding since it came on board. And to me, it hasn't really shown a good bottom yet. But as I start to see a bottom in this is a play that I'd be looking to sell puts on. And mostly that's because, one, I just love selling naked puts, but I am in general relatively bullish on the crypto world over the next, 1 year, 2 year, 10 years. Maybe someday we can get into a story on my exposure to crypto. I got burnt pretty bad a long time ago when crypto first came out with Bitcoins. I had a miner, one of the very first ones before any of the ASICs were out there. And, I did a good fair bit of Bitcoin mining back then. But that's a story for another day. It's a sad one. Spoiler alert. Yeah. So aside from other thoughts that I have on crypto, the only other thought that I think is pretty neat is you can trade it and you can exercise a lot of these levels that Viper XL was talking about without worrying about pattern day trading. So there are some brokers out there, Tastyworks. I have an account on Tastyworks, and they let you trade direct crypto. Now, TD does not let you trade direct crypto. Tastyworks does. They let you trade Bitcoin, Ethereum. I think they have like 13 different currencies that you can trade. Their commissions, I believe, are about 1%. I think it is 1% of whatever you're trading. You can trade as small as $1 in any of the cryptos. And I think the maximum's like 75 grand on any one order. But the cool thing is because these are not securities, there's no such thing as wash sale with them. With the wash sale rule applies only to securities. So, this might be a good vehicle if you are really kind of wanting to day trade trends, candles, things like that, where you can do that without actually needing the capital for a pattern day trader. So, we can talk about this in another episode, but basically in order to day trade, you need $25,000 in your account to get around the pattern day trading restrictions. So with crypto in some brokerage accounts, you can trade in and out of crypto 5,000 times a day and nobody cares, right? So it's a neat vehicle to maybe try some of these technical analysis techniques at a real small scale on the minutes or whatever those tiny candles are during the day.
Not to mention, it moves so fast that you're gonna see trends. So what I mean by that is you go into your brokerage, you look at the stock market, and you try to pick a stock that you want to test out. Even if you're cleared for pattern day trading, but you're not comfortable moving a lot of money with it, it's still hard to find something that gives you the vehicle to test specific trends or patterns or strategies. Most of these coins move so fast during the day. 24/7 also is another thing that you could do it whenever you want. So there's a lot of that upside. Obviously, all those upsides come with plenty of opportunity to get burnt. So always be careful. Always, even if you're just playing around, know your limits and know your exit strategy.
Yeah, I'd say that's an excellent point. And if and when crypto becomes a part of my portfolio trading, it absolutely is going to be adhering to my position sizing restrictions. So, you can hop back and watch one of our episodes on position sizing. But in general, I allocate a certain size of any particular asset in my portfolio, and I don't let that asset exceed that size. And the reason for that is because at the end of the day, you don't know what's going to happen. You might have good indicators that the probabilities are in your favor, but you could just as easily lose as win. And so it's extremely important to make sure that your portfolio can take a big hit on any individual position without wrecking the larger portfolio. So absolutely make sure you know what your position sizing is in your portfolio. And as tempting as it might be to go all in the cryptocurrency, you want to be trading for longer than a week, I assume. And if you want to do that, you have to manage your capital in a way that lets you preserve that capital and continue playing day after day after day. So that is our initial scratching the surface here on crypto trading and our kind of initial thoughts and how we kind of apply some of the traditional technical analysis tools to the crypto markets. It's definitely something that we'll be watching. It's definitely something we're interested in learning more about. It's definitely something that we'll probably have future episodes on. So if there's a particular thing, like we mentioned earlier, that you'd like to hear or talk about or see with respect to crypto or anything like that, drop us a comment in the video below, hop in our Discord, send us a message, just reach out to us, let us know. We'd be more than glad to work that into a future episode. Just a quick preview announcement. We're going to be putting together an awesome mini series that I'm super excited about here in the next coming weeks. It's going to be a multi-part episode, and it's basically going to be how to start trading. Not sure how many steps it's going to be, but basically we got to get questions and feedback about just, where to start, what to consider. And so we're going to jump through several weeks episodes of covering just different aspects of the basics of hopping into trading to get more comfortable with it. So be on the lookout for that. The first installment will probably be next week. So aside from that, have a great week trading. Good luck. And remember to think outside the block.